In this segment, I'm going to ask you the question, do you own a cow? That's right. Do you own a cow? Okay, on this segment, I'm going to do my Karl Rove impression, or I'm going to try to pull it off anyway. I have no idea whether I'll do a good job or not. But let's say I'm talking about you, and you have husband right here meets wife, and they start out with the little kids, and life is going good. And let's say that husband's tired of working for somebody else, decides he wants to start his own business, right? So he starts the business, and he doesn't have a whole lot of money, but he's got some money. And so, he's got a little money in the 401k plan. So that'll be the 401k plan. And then he starts to build this business, and he starts to get some value growing inside the business. And then as time goes on, it becomes, we've got to start adding some real estate. And then because they got to own the building, right? You start the company, you got to own the building. Say it's a manufacturing company, so they got to own the real estate. And then they start making so much money in the company that they've got nice cash building up in investment accounts. And that's how things kind of get started. But what ends up happening with this business is over time, this business becomes such a big piece of the whole pie. And the business is feeding everything else that's going on in the family. It's providing the cash flow to be able to buy more and more real estate. And as my pens go flying all over the place, the bucket of cash that they've got sitting there is getting bigger and bigger. And maybe you've added a few more kids along the way. And these kids now are starting to get to a point where they're getting out of college and they're wanting to come and work in the business. And the owners now have gone from being maybe 35 years old when they started the company. Now they're getting close to 60, and they might have one or two kids coming in and saying, we want to take on the business. And one of the big problems here, if you don't plan right, is if your estate is big enough, when you die, the federal government is going to hit it with an estate tax. And the estate tax can be 40% of whatever it is that you've built up here, whether it's real estate properties, whether it's closely held stock in a company. The IRS can take 40%. Today, it's anything over $30 million. If your estate's over $30 million, there's a 40% estate tax. Now, $30 million might sound like a lot of money, but today, as businesses have grown, and we're looking at the cash flows that are coming off the companies, the private equity firms are paying crazy money for companies today. And you might think, well, shoot, my company might be worth 10, but it's not worth 30. Well, if you get a valuation of what's going on in the marketplace today, you might find out it's worth a whole lot more money. So if a 40% estate tax is going to be due, which of these assets do you sell to pay the tax? Do you take the bucket of money you've accumulated over the years? Do you sell off the real estate to pay the tax? Or do you sell off the business? And so when I talk about, do you own a cow? The cow in this whole scenario is the business. And I'm going to talk about that in just a second. I got to clean off the whiteboard, and I'll be right back. All right. So I'm going to show you my beautiful artistic skills here. What do you suppose that is? Well, that's my rendition of a cow. What do you suppose that is? Well, it's a bucket, of course. Doesn't it look like a bucket? Okay, so what's in the bucket? Well, if you haven't figured it out by now, that's milk. Where does the bucket get the milk? The bucket gets the milk from the cow, right? Okay, now here's the real tough one. If you can guess this, you are really smart. What do you suppose that is? It's a rat hole. You know how you can tell? There's all kinds of rat droppings around the outside of the hole. That's how you know it's a rat hole. Now, let me ask you this. What is the worst rat hole you can think of? I mean, the worst rat hole that's ever been created on planet Earth. I think it's the IRS. That's right. You got to agree with me, especially when you look at how much money has been going to that U.S. aid groups that's throwing money all over the world for no good reason and padding the pockets of all the politicians. You ever think of a rat hole today? Elon Musk has proved that the IRS is a big rat hole. Now, here's the real tough question. If you had to throw one of these two items down the rat hole, which one would you throw? Come on. It's going to be a hard one. Which one would you throw down the rat hole? The cow or the bucket of milk? The milk. Of course, the milk is what you'd throw down the rat hole. Why? Because the cow can produce more milk. So if you throw the bucket down the rat hole, you still have the cow, right? So think about your business as being the cow. So if you have a manufacturing company, a sales, marketing, a distribution company, professional corporation, you name it, that business is your cow. And that cow kicks off the milk that provides cash flow for you to do whatever it is you need to do. And one of the biggest mistakes I see people make is they say, you know what, I got a big enough estate, I got big enough net worth. You know, if I drop dead and the IRS wants 40% of anything I have over $30 million, I'll just sell it, which means you take this cow and you just eliminate the cow and you have no more buckets of milk to be able to do things. It's a big, big mistake. Now, what we suggest a person do is they keep the cow, they let that cow keep producing the milk, but you take and you put a little spigot on this bucket and you use a little bit of the cash flow that's coming off that cow every year and you set up a life insurance trust. And when you send the money to the life insurance trust, then what the life insurance trust does is they send the money to an insurance company. And we figure out how much cash that 40% represents of the total estate and what kind of a bill we're going to need to pay the IRS. And we plan ahead for growth, but we figure out what dollar amount that we're going to need. And we insure mom and dad to make sure that there's liquidity to pay the tax. So at death, what happens is the insurance company writes a big check to the life insurance trust, and the life insurance trust writes a check through the estate and throws the life insurance proceeds down the rat hole. So the family gets to keep the cow and all the milk the cow will produce going forward. So this is where life insurance comes in and is really, really important. It'd be crazy to sell the cow and lose all the milk when you can take a little bit of the milk every year and fund an insurance trust to have the cash to be able to throw it down the rat hole so the IRS leaves your family alone, the business stays intact, and your kids can keep running and operating the business. Now, if you're going to apply for life insurance, there's some very key things that you need to know about before you do it. So I'm going to clean the whiteboard, and then I'm going to draw a little bit more. Hopefully you're not getting sick of my lack of artistic skills. Okay, so let's talk about the life insurance side of all this. What most people do when they look at buying life insurance is they've got their friend Fred, who's a life insurance agent, a buddy they've known for a long period of time, and they go to Fred, maybe after talking to their attorney or CPA, and say, Fred, look, I need to buy life insurance to pay the estate taxes. And let's say Fred works for Northwestern Mutual. Northwestern Mutual Life. And Fred says, all right, Mom and Dad, I want you, can't draw very well, I want you to fill out an application for Northwestern Mutual, and we'll send it off to Northwestern Mutual's underwriting department, and we'll see what kind of deal we can get you. If Northwestern Mutual looks at the medical files of both mom and dad, if there's something that they don't like in those medical files, Northwestern Mutual could either rate up the cost of the life insurance or they could decline them. If they rate up and if they decline mom and dad from getting insurance, all that information goes to the Medical Information Bureau. Every other insurance company can look at the fact that Northwestern Mutual got your medical files and they rated you up or declined you, and then they will decline you or rate you too. Once you do what's called a formal application, all that information goes to the Medical Information Bureau and can be used against you if you try to get life insurance from another company because you thought what Northwestern Mutual did wasn't fair. So what we do in our operation is a little bit different, so I'm going to erase the board and explain that to you. Okay, so here's what we do. Instead of going direct to any insurance company, this is what we do. We come back. Oop, that's dry. Okay, we come back and we've got mom and dad here. And rather than doing a formal application, the first thing we do is we pull together their medical files. And we compile the medical files in our Omaha office. And then we're part of a national network that functions out of Austin, Texas. And what we do is we take these medical files and we send them down to Austin, Texas in their underwriting department. They're not an insurance company. They are a privately run, privately operated underwriting department that has specialists in there that package all the medical files. Once they have everything they know they need, then they shop your case to multiple carriers. So, they'll go all the way out to a bunch of different firms that they think would make sense given what we're trying to accomplish. And they'll ask the question, what kind of offer will you provide the client? So offers start coming in. If you have this company here decline and this company rate, the other three companies have no idea what these two companies have done. And what they do is they start bidding out what the best offer they'll do. Just this week, we had a couple, both of them, that were very overweight. They got declined by three different companies, and they got a standard offer from one. And his offer was from one company, and her offer was from another company. They were both standard. But basically, 1 out of 5 gave him a good rating. The rest of them declined him. So this is really, really important because let's say you need a $10 or $20 million policy, and it's essential that you save the estate from having to liquidate the business to pay estate taxes. It's essential that you get the life insurance. Please do not send in a formal application to any company. Call our office. We'll work to gather all your medical files. We'll ship them down to our underwriting department, and then we'll bid it out. It's called informal underwriting. It's informal. It's not formal. Nothing goes to the Medical Information Bureau. So if these two companies decline you, the Medical Information Bureau will not know. It's only until you do a formal application that information can go to the MIB. So what we do is we get the best offers and we look at the rating classes and then we compare the products. And each company has 3 or 4 different products that we might look at. So we'll look at 3 or 4 different products per company, and then we'll make a decision on what we think is the best to offer to the family, and then we'll complete the formal underwriting. So as I wind up, I want you to think about this. your business is your cow. Your business is what generates all the cash flow, all the income for your family. It's the dumbest thing in the world to consider putting it on the auction block to pay estate taxes. Usually, you've got to come up with money pretty fast, and the IRS wants their money in 9 months after the date of death. So you got to move fast. If you move fast on selling a business, what's that do to the price? It drops it. So keep the business in the family. Look at providing the liquidity through life insurance, but do it the right way. If you need help with that, feel free to give me a call any time. We'll bid it out for you without you having to feel like you've got any obligation to us. But there's a right way to do it, and that's what I've explained here. So let me know if we can help you.